Hey, Richard.
Hey, how you doing?
All right.
Good. Finally be done with this.
Okay. Give us a few minutes to let everybody get on. We'll start.
Sure.
The host?
Yeah, we've got 10 people so far.
Richard, did PMP send out a reminder message yesterday?
No. No?
No.
Hmm.
The internet right now, so
I guess I don't understand. No.
money. Yeah. Yeah.
All right.
Yeah, I think she's got about 40 minutes or something. It just started. So. All right.
All right.
Tell everybody we said hi. All right. No.
All right. I think we can get this going. So, first off, I want to thank everyone for showing up. I know it's not exactly the most entertaining subject to talk about, financials, but it is really important that each of us in the community understand exactly what our financial position is. So hopefully you'll walk away from this presentation with a little bit more knowledge and maybe a few laughs or two. For those of you that don't know me, I'm Rich Oster. I moved into the community with my wife about a year ago. And then the other individual who will be speaking today is Richard Eichner. Richard, would you wave your hand and say hi?
Hi, everybody.
So anyway, if everyone's ready, let's start this process. All right. Okay, can everyone see the screen? Just make sure I've got everyone. Okay. All right. So, hi there. Today, Rich and Richard, we're going to be giving you a brief introduction to our financial reports. Essentially, what we're going to do is we're going to define a few terms for you and then walk you through each of the financial reports I've listed below, the income statement, balance sheet, and statement of cash flows. Then Richard is going to walk you through the accountant's letter, and then after that, we're going to open it up for questions. So if everyone's ready, let's begin. I'm sure everyone agrees we absolutely do live in a beautiful community here at Belcaro, but that beauty does come with a lot of effort and money. Believe it or not, the Belcaro board manages the financial resources of a small city. So where do all those funds come from to operate this small city? Well, you, of course, through your monthly association dues that each of us pays. So it's the responsibility of our board to ensure that your monthly dues are properly managed so that Belcaro continues to run smoothly and maintains that beautiful environment that we've come to love and enjoy. At least we can't participate yet, but hopefully this summer we can. To accomplish this, the Belcaro board utilizes many resources and tools to manage this community. The monthly financials are the primary tool we use to measure performance and plan for future events. Think of them kind of like the gauges on your automobile dashboard. Separately, each gauge on your dashboard gives you information about the performance of your car, but it only becomes useful when you use them collectively. Our financial statements are like the gauges on your dashboard. Each gives you some small piece of information about Belcaro, but until you combine them all together, you don't have a complete picture. So before we begin though, I just need to define some terms that we're going to hear, that you're actually going to hear throughout this presentation. So we use what is called fund accounting. It's a type of accounting that most HOAs use. It emphasizes accountability rather than profitability, because remember, we're a not-for-profit organization. One of the requirements of fund accounting is that both types of funds, an operating fund and a replacement fund, have to appear on our reports. So when you look at our reports, you always see an operating column and a replacement column. But what do those columns mean? Well, the operating fund, think of this as like the unrestricted fund. The board can use these monies how it deems necessary to make sure that the activities at Belcaro flow nicely. The replacement fund, though, is a very restricted fund. These monies can only be spent on specific predefined activities. Another interesting aspect about the replacement fund is you can't take replacement fund money and transfer it over to the operating fund, but you can transfer operating fund over to the replacement fund. And finally, the last term you're going to hear are accruals. I know we're getting into the accounting end of it, but believe it or not, those of you who write checks actually create accruals. You may ask yourself, I create accruals? How can that be? Well, when you write a check, you record that check amount in your register. You subtract it from the previous balance and you get a new available balance. But has that money left your account? Well, of course not. It does not leave your account until that check is cashed at some future date. So therefore, you're actually recording an event in your checking account that will occur sometime in the future. That's an accrual, a financial event that occurs in the future. So keep these things in mind as we explore our financial reports. Relax, not that scary, okay? Our monthly financial package is actually composed of 3 primary reports. We have the income statement, we have the balance sheet, and we have the cash flow statement. So I'm going to go through each of these and just give you kind of a high-level introduction to each one. Next month, we'll actually go into more detail and give you an opportunity to really understand the numbers that are contained within each of these reports. So now we have the income statement. The income statement is one of Belcaro's core financial reports. It is actually, they call it the excess of revenue. A lot of us accounting types refer to it as net income. And essentially what you're doing is taking all the revenue and subtracting all the expenses from both the operating and non-operating activities. Unlike the balance sheet, which is a snapshot of our HOA on a specific date, the income statement shows our profit and loss over a period of time. So Belcaro's year end is June 30th, if you didn't know that. And I know that seems like an odd day to end a year, but you know, we can actually end our year on any month we choose. By choosing June 30th, though, we get to utilize our CPAs in the off season, and this translates into lower fees to us when we use them. Here we're going to introduce the balance sheet. The balance sheet, as I said before, is a snapshot of our association as of an exact date. For instance, June 30th, 2020, which we'll be exploring next month. The balance sheet is usually prepared monthly or quarterly. We prepare ours monthly and have a CPA reviewed statement prepared at year end. Richard's going to discuss what constitutes a reviewed statement later. The balance sheet lets you know exactly the things of value that our HOA owns, our assets, who we owe money to, liabilities, or the equity of the HOA, fund balance. So it's composed of 3 specific pieces. Finally, we get to the statement of cash flows. Unlike the income statement, the statement of cash flows shows what changes occurred to our cash account over a period of time. In simple terms, it just shows where our cash came from, and how it was spent. You may ask yourself, well, isn't that the same thing as the income statement? I mean, well, yes and no. The income statement actually shows where our income comes from and how it was spent. The difference is that part of the revenues and expenses come from accruals. Remember I mentioned accruals earlier? Future events that do not affect cash immediately. So our association receives most of its income from our monthly dues that we pay. And unfortunately, our bills don't always come in the same amount every month. Sometimes we have to prepay an expense, such as insurance, or we have to pay for an unexpected item, a burst pipe. So that's why monitoring our cash situation in the association is so critical. Without this statement of cash flows, we couldn't be certain that we will have the necessary cash on hand when it's required. So hopefully you now understand why this report is so important. The statement of cash flows reflects our association's ability to meet our financial obligations in both the short and long term. Okay, I'm now going to turn this over to Richard. He's going to explain this accountant's letter to you and the accompanying and how it affects the annual financial statement.
Rich, thanks a lot. I gotta say, on behalf of everybody, what a fantastic job you did with the PowerPoint presentation. It's really way beyond, you know. So Rich discussed our financial statements, and they'll be discussed further in March and April. And our fiscal year ends on June 30th. A little background on all of this stuff that maybe you don't know about. The accounting profession determines what is in these reports. Regardless of where you live in the United States and what CPA firm does the reporting, an HOA will report the same financial reports and in the same format. By California law, these reports are required to be distributed to HOA members. And as Rich mentioned, they're prepared on an accrual basis, and they also use fund accounting. That information is included in notes to financial statement pages, and everybody gets a copy of these financial statements. And part of it are the notes, and it is kind of interesting to leaf through them. The next question is, what did we buy from the CPA firm? The statements you see are reviewed statements provided by an independent accountant. Independence is a very important principle to a CPA and assures the public that the financial statements that they're seeing are not influenced by some other private relationship. What does a review mean? Taking a step back, there are three types of financial statement reports CPAs put together: compiled, reviewed, and audited. In a compiled statement, the CPA is providing the most basic level of assurance. Typically, the CPA makes some final adjustments to the statements provided by management, or in our case, PMP, and puts them in a format which the profession requires, but does not provide any assurance they were prepared in accordance with GAAP. GAAP stands for Generally Accepted Accounting Principles, which are the United States accounting standards. A review is more involved than a compilation. That's what we're buying. A CPA does some analytical procedures like comparing year-to-year differences, and they're supposed to ask questions of the board and PMP. An audit is the highest level of assurance a CPA can provide. In addition to what the CPA does in a compilation review, they provide additional verification and substantiation procedures. For example, they'll inspect the fiscal plan or inventories to confirm they actually exist or are in use. They'll contact banks to confirm account balances and confirm accounts receivables and account payable balances, the accruals that Rich mentioned. It also includes an in-depth review of the internal controls and control risk. What are internal controls? Internal controls are all the policies and procedures management uses to safeguard assets, ensure the reliability and integrity of financial information, ensure compliance with applicable laws, promote efficient and effective operations, and provide a mechanism for management to monitor the achievement of the above goals. As our CPA review report states, management, meaning our board and PMP, is responsible for the presentation in accordance with GAAP and the design, implementation, and maintenance of internal controls, whether due to fraud or error. The CPA is not expressing opinion on this matter because they haven't done the appropriate tests. Highlighted on the screen, you can see the CPA firm is stating it is not aware of any material modification that should be made to the financial statements, but they're not expressing opinion on the other areas that would be examined in an audit. So to continue Rich's auto analogy, a review is like a 20-point inspection from an express oil change business, and an audit is more like a 160-point inspection a car dealership will do to get a certified used vehicle. So to conclude, in our case, PMP prepared the statements and the CPA did some basic work and provided a limited assurance for the statements. A review report is the minimum standard, and HOA of our size is required by California law.
All right, thank you. Thank you very much, Richard. All right. So, hey, so you made it. To recap what we covered today, we defined the following terms: fund accounting, the type of accounting used by Belcaro; the operating fund, monies that have unrestricted uses; replacement fund, monies that have restricted uses; and accruals, future events that don't use cash. We introduced the following financial reports: the income statement, balance sheet, and statement of cash flows. Finally, we explained the accountant's letter and our year-end financial statement. So this actual part will be continued on March 11th at 2 o'clock. That's when we're going to delve deeper into the following reports. We're going to look at the balance sheet in depth, the income statement. We're going to review the revenues and expenses, and then walk through the statement of cash flows so that you get an understanding of how our cash is being spent and where it's coming from. So now I'm going to turn it over to the floor. Questions? I guess we lost everybody.
Hey, Rich, this is John Greenfield. I got a question.
Yeah,
Hey, so next month and the month after, you're going to be talking about more in depth on the income statement, correct?
that is correct.
Does that mean that you are going to be cover the administrative and the payroll expenses that are on the reports?
Yes, we will, John. We'll be actually going through all of the expenses and giving you an idea of exactly what types of expenses you're going to find in each category. So if you looked at our statement, you'll see that under administrative, you've got the gardening, you've got the management company, PMP, you've got the CPA firm, and so on. So yes, that will happen.
Okay.
The other thing, if I can interrupt, in April, the reserve team is going to discuss the reserve fund and how that's determined and the adequacy of the reserve fund and funding strategies, which is a big topic and has a lot of money associated with it.
Okay, and then my other question, as we go over all these reports, are you going to be talking about why the Greens pay more in the fees each month than the other parts of our community? Will that be covered?
It won't be covered in the operating end of it, but as Richard just said, it will be covered under what we would call the restricted fund. So the replacement fund, that'll be covered by Nick and his team.
Okay, so I just need to wait. Thanks.
Okay. Any other questions? No hands raised? Okay, well, unless there are no more questions, I think we can conclude this.
Well, you guys
agonizing.
did a great job. Thank you very much. It was very informative.
Thank you, John.
Thank you.
Thank you. All right. Have a great day and thank you for attending. Bye.
I think that the board should put out a notice next meeting in advance so that people that did not look at their calendar can be, put on notice that the meeting is occurring the next day or whenever they put that notice out. Some people have a tendency, to forget if they're not reminded.
Okay. I'll mention that to Zeke.
Bree.
Oh, okay. I'll mention it to Bree. All right. Any other comments or questions? All right. Well, thank you very much. Have a great day.
Thanks, Rich.
Bye.